Hello dear traders, welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. The US dollar was weaker against its rival currencies in Asian trade today, as the positive sentiment on the US currency turned into a wait-and-see approach. Yesterday's news on minor growth in the US industrial production raised doubts among investors about the US Fed's determination to tighten monetary policy later this year. So the Japanese yen was able to gain ground against the US dollar. In Asian trade, the dollar-yen pair declined to 103.70. However, the Bank of Japan has been sending mixed messages to financial markets. Traders are keen to find clues about further moves of the central bank and how these measures will affect Japan's economy. To put it simply, the Bank of Japan tends to take more unexpected decisions on monetary policy than the US Federal Reserve. Speaking to the Economic Club of New York yesterday, Fed Vice Chair Stanley Fischer made flat statements when was assessing the current condition of the US economy. Citing Stanley Fischer, the economy has been showing steady but sluggish growth. Besides, he mentioned developments in the global economy, in particular a slowdown in overseas economies and investment cuts. So the number 2 US central banker warned against making rash changes to the policy framework in an effort to boost economic growth. On the other hand, keeping too low interest rates for a long time could also have an adverse impact on the US economy. Dubious comments of the Fed Vice Chair caused big moves on Forex. Following Fischer's speech, investors opted to lock in profits after the dollar's recent rally. Risky assets like the Australian dollar received a boost from improved risk sentiment. The Aussie managed to approach the resistance level of 0.7700. The Australian versus the US dollar pair closed the Asian session at 0.7680. Apart from the weaker US dollar, the Aussie found support from the positive minutes of the latest RBA's meeting. The Reserve Bank of Australia noted that it is pleased with ongoing developments in the country, except for the labour market and housing market. It means the odds are that the regulator will stand pat on monetary policy in the short term. This was Daily Financial News on Insta TV. Thank you and have a nice trading day. Bye.